Just over 14 days back, on July 11th, a residential statute quietly took effect that barely got mentioned on news outlets. What you heard instead was typical chatter: mortgage interest rates, homebuilder equities, inflation concerns. Nobody sat down and explained what it truly means if you're a former service member past 60 trying to figure out your next steps. And at the precise same time sitting inside the Senate right now is a secondary measure that could add extra money to a veteran's monthly check. Two distinct measures, two distinct tracks across Capitol Hill, and between them, a real shift in what's available to older veterans. Most channels are only featuring one or neither. I'm going to guide you through both. I am no specialist, but on this channel every week, I cover real financial information that affects seniors directly. The regulations that changed, the protections you already qualify for, and steps that actually make a difference. This is exactly the kind of material I produce every single week, and you do not want to miss it. If that's the kind of information you wish to hear, then make sure to press subscribe and turn on notifications right now. Now, let's get into it. Let me start with where this actually originated because it explains a lot. The housing law is H.R. 6644, the 21st Century Road to Housing Act. ROAD standing for Renewing Opportunity in the American Dream. It passed the Senate 85-5 on June 21st, and the House 358-32 the following day. Those are the kind of margins you almost never see anymore. But here's the part most coverage skipped entirely. President Trump never actually signed it. A signing ceremony was scheduled and then canceled because he wanted a separate voter ID bill, the Save America Act, passed alongside it and was using the housing bill as leverage. Congress stayed in session. He didn't sign it and didn't veto it within the 10-day constitutional window. So under Article 1, it became law automatically on July 11th. No signature, still binding. The second bill is newer and less talked about. It's H.R. 647, the Cherie Briley and Eric Edmondson Veterans Benefits Expansion Act. The House passed it 235-179 back on May 21st and is currently sitting with the Senate Veterans Affairs Committee. It hasn't become law yet, so nothing inside it is guaranteed, but it's moved further than most veteran-focused bills manage, and it's worth understanding now rather than after it either passes or stalls why the sudden push on housing at all. The White House's Council of Economic Advisors has pointed to a national shortfall running into millions of homes, while independent research groups put the real number considerably lower. Whatever the exact figure, every serious estimate agrees on the direction. There simply aren't enough homes at prices ordinary people, veterans included, can actually afford. Older veterans feel that squeeze in a specific way. Plenty paid off a mortgage decades ago, only to watch property taxes, insurance premiums, and repair bills climb faster than a fixed pension or Social Security check can keep pace with. That's the backdrop every provision below is responding to. Point 1. The housing law fixes something that's been quietly disqualifying disabled veterans from help for years. Tucked into Title VI is the Housing Unhoused Disabled Veterans Act. Before this, a veteran's disability compensation counted as income when HUD decided who qualified for the HUD-VASH voucher program, the joint HUD and VA effort that houses veterans experiencing homelessness. That meant a veteran with a high disability rating could get flagged as making too much money for the very housing assistance meant for people in his situation, even while sleeping in a car. This provision permanently strips VA disability compensation out of that income calculation. So, a veteran's earned benefit no longer works against him when he needs supportive housing. Point 2. This one's easy to miss if you're not shopping for a mortgage. Section 6003, the Veterans Affairs Loan-Informed Disclosure Act, or the VALID Act, requires lenders to show veteran homebuyers a straightforward cost comparison between a VA-guaranteed loan and other mortgage options at the point of application. VA loans often come with no down payment and no private mortgage insurance, but plenty of veterans get steered toward conventional loans simply because they were never shown the comparison. This closes that gap and gives lenders some liability protection for making the disclosure, which should make them more willing to actually offer it. The same housing law also expands an FHA pilot for small-dollar mortgages, loans under $100,000, with help toward down payments, closing costs, and title insurance. Lenders have historically avoided writing loans that small because the paperwork isn't worth the profit margin, which has made it harder for veterans looking to downsize into a modest, lower-priced home to get financed at all. And separately, the law drops the old requirement that manufactured homes sit on a permanent steel chassis, a rule that existed mainly so a home could technically be towed, even though almost nobody relocates one once it's placed. Researchers estimate that alone could shave $5,000 to $10,000 off the cost of a manufactured home, which matters most in the rural areas where a lot of veterans already live and where manufactured housing makes up a real share of the market. Now, separate from that housing law entirely, there's the annual cost of living adjustment that took effect this past December. For 2026, VA disability compensation, dependency and indemnity compensation, and VA pension all went up 2.8%. Matching the Social Security COLA, a veteran rated 100% disabled with no dependents went from roughly $3,831 a month to around $3,938. That same increase applies to veterans rated at total disability based on individual unemployability who get paid at the 100% rate even if their scheduled rating is lower, and to special monthly compensation, which can run past $9,000 a month for veterans who've lost use of limbs or need extensive daily care. It's automatic. Nobody has to file anything for this one. But it's worth actually checking your award letter or your va.gov account to confirm the new amount landed, since underpayments and missed dependent adjustments happen more often than people expect. So here's what I want you to do. The benefits, the discounts, the assistance programs most seniors qualify for but never actually use. I gathered them all in one spot, organized by state and by program, so you don't have to dig through confusing government websites for hours. It's quick, it's straightforward, and any senior can find exactly what fits their situation. No matter what state you're in, there's help out there you're probably leaving on the table. It's called the Senior Exemption Playbook, and it's sitting in the first pinned comment right under this video. Just tap it once, and you'll have everything you need. Now, stay right here because the last one is where a veteran's pension actually turns into its biggest number, the aid and attendance add-on that can nearly double what you're receiving every month. And it's the one benefit most veterans applying for a pension never even think to ask about. Let me back up and cover the VA pension program itself, because a lot of veterans over 60 either don't know they qualify or assume they've already got everything coming to them. The VA pension is a separate needs-based benefit from disability compensation. You don't need a service-connected injury to get it. What you need is wartime service, an honorable discharge, and income and assets below the VA's limit, which sits at roughly $163,700 in net worth for 2026, not counting your home or your vehicle. The basic pension tops out around $1,453 a month for a single veteran, or roughly $1,903 with a spouse or dependent, calculated as the maximum rate minus your countable income. On top of that basic pension sits aid and attendance, and this is the part that catches people off guard. If you need help with daily activities like bathing, dressing, or managing medication, or you're in assisted living or a nursing facility, that basic pension amount jumps substantially. Depending on the source and your exact situation, the combined aid and attendance rate for 2026 runs close to $2,700 to $2,900 a month for a single veteran and can climb higher with a dependent. On the same underlying income, adding aid and attendance can very nearly double what the basic pension alone would pay. It's paid to wartime veterans and surviving spouses, regardless of whether the injury is service-connected, which is exactly why so many people who qualify never apply. They assume it only applies to combat injuries, and it doesn't. Two details that trip people up when they apply. First, the VA looks at net worth, not just income, and that net worth calculation excludes your primary home, one vehicle, and ordinary furnishings. So, owning a paid-off house doesn't disqualify you the way people often assume. Second, there's a 3-year look-back on asset transfers, meaning if you gave away savings or property specifically to qualify, the VA can still count it and impose a penalty period before benefits start. Unreimbursed medical expenses, on the other hand, work in your favor. They reduce your countable income and can push your benefit higher, which is why keeping receipts for home care, assisted living, or insurance premiums genuinely pays off at application time. Now to H.R. 647, the bill still waiting on the Senate. If it becomes law as passed by the House, it would create a brand new supplemental monthly allowance of $833.33 for veterans who already receive a service-connected aid and attendance allowance tied to their disability rating, on top of whatever they're currently paid. The Congressional Budget Office estimates around 8,000 veterans currently qualify for this category, growing to roughly 10,000 by 2036, and projects the benefit would rise with future cost of living adjustments to somewhere around $1,026 a month within a decade. Payments would begin December 1, 2026, assuming the bill clears the Senate and gets signed before then. The bill also raises dependency and indemnity compensation for surviving spouses and dependents beyond the standard cost of living adjustment. An extra full percentage point on the next scheduled increase, then an additional half point after that. For nearly 600,000 DIC recipients, the CBO estimates that adds up to roughly $23 more a month in 2027, growing gradually over the following decade. It's not a dramatic jump in any single year, but it compounds. And for survivors living on a fixed income, every adjustment matters. Two more pieces worth knowing about. The bill would expand eligibility for VA guaranteed home loans to certain members of the National Guard and Reserve components who currently fall outside the qualifying service requirements, opening the door to no down payment financing for a group that's historically been left out of it. It would also extend through September 30th, 2036, a long-standing limitation on pension amounts for veterans who are hospitalized or living in a Medicaid-covered nursing facility. A technical provision, but one that determines how much of a veteran's pension is protected versus redirected toward the cost of institutional care. None of what's in H.R. 647 is guaranteed yet. It is referred to committee, not law. And Senate timelines on veterans legislation have a habit of dragging. What is guaranteed is everything already in H.R. 6644 and the 2026 COLA, since both are already in effect. The real risk with either one isn't that the benefits are fake, it's that almost nothing here arrives automatically. The VASH income exclusion helps a veteran who's already in the HUD-VASH pipeline, but someone has to know to ask about it. Aid and attendance has existed for years and remains one of the most underused VA benefits on the books, precisely because most eligible veterans never file the paperwork. If you're over 60, or you're the one keeping track of a parent's or spouse's benefits, the smartest move this week is a call to your local Veterans Service Officer or your County Veterans Affairs Office just to check what you're currently receiving against what you're actually eligible for. VSOs don't charge for this, and they're the people who know which of these programs are actually accepting applications in your state right now. Since rollout timelines vary by agency, and not everything above is live everywhere yet, it's also worth checking va.gov directly and setting up an account if you haven't, since that's where COLA adjustments, pension statements, and aid and attendance applications all get processed, and where you'll eventually see whether H.R. 647 becomes law, rather than staying stalled in committee. The gap between what a veteran is currently receiving and what they're actually eligible for once someone sits down and checks both columns side by side turns out to be bigger than most people expect, and closing that gap doesn't require a new law at all.